Hope everyone's doing well. This is going to be a video over today's price action, August the 2nd. So coming into the day, do it like this. We had a big gap up, and on the daily chart, we had a weak high one buy right here, and it's not a great buy. Tight trading range. 60-minute chart. Well, here, let me just go to 5-minute. I really want to make this more about just the simple 5-minute price action, not make it just too complicated by adding more things. So you can see on the prior day, let me do it like this. Prior day, big gap up, and you don't need to see this many bars. In fact, I'd be more inclined to kind of maybe look at something like this. So first bar of the day, we had a pretty big bar, doji bar, close a little bit above its midpoint. Odds are you may go a little bit above the high, but even if you do, probably not the low of the day. It's a lot of risk. So if you're buying, just do like this. So if you're buying above, the risk is big. Most people don't want to risk this much on the open, buying above that bar. Probably sellers above and probably buyers below. Big bar, gap up, so may have to go sideways to moving average. Bar 2, doji, consecutive inside bars. Could be a possible final one bar, couple bar final flag and sell off. Inside bar, you can call it it's triangle. It's an II pattern. It's breakout mode, 50% chance we're going to break out up or down. This is not your traditional breakout mode on the open, because normally you need about 10 bars and you get a new high that fails and a new low that fails in the span of about 10 bars. Then it becomes more breakout mode kind of scenario. I think we'll have to get more bars and have to go above this and above that. High 2 buy, but again, same problem as the first bar, big risk. You can put a stop below. However, it's still not that great of a buy. And big bear bar closing on its low. You can sell it, but a lot of traders, maybe they'll sell 50% pullback. You can call it a wedge, 1, 2, 3. Maybe we get a bull bar closing on its high. So again, big bull bar or big bear bar, negative bull inside bar, closing on its high. And we get a weak bar, it's a 50% pullback. See here, so some traders, again, it's breakout mode. You can obviously went down. It's not a great buy above, had to do anything. Maybe you sell below, but you're betting on a breakout of a tight trading range. Not really that great. Doji bar looks like it may fail, and it's tempting, but this bar did close at a new low, and you could get something like a big bear bar closing on its low and an endless pullback. Now, really better to wait for a stop entry. You can buy the close and use a wide stop, but then you've got to deal with the emotional portion of having to. There's always a chance you can be wrong. So if you're, it's very tempting to just you can buy here and scale it in lower. A lot of traders are doing that during this, but if you get a bear bar closing on its low for this bar, you've got to be careful. And then we get a reasonable stop entry. It's an okay buy above, stop below, but tight trading range on the open, you've got to be leery. Everybody wants a strong, everybody wants the easy trade. Yeah, and where you put your stop below, buy above, 1 times your risk is here, 2 times your risk is there, you do an order cancels order, and you make twice your risk, but that's not most opens. Now, this is a reasonable buy though. Follow through, but again, it's average, not that strong. Smaller body, so big risk. Bull body, smaller bull body. Sign of weakness. maybe 1 times the measured move. 1 times your risk is if you buy above the bar, there's 1 times your risk up here, and you can see we touched it and then started turning down. But a lot of traders are scalping. This is a small little sign of lack of energy. We're back to the open of the day, and I mean, there's not a lot of, I don't think there's a lot of sellers below this bar. So, yeah, yes, it was a failed breakout, but it's not that enticing. It's not like, even over here, this is a strong rally, but it's a buy vacuum test of the moving average, and I'll talk about that in another video. So it's a buy, it's weakening. Some bulls will start to get disappointed and start to scalp out. I think it's reasonable to buy and just go for 4 points. And when you see this bar, it's outside down, then you get another bar outside down, consecutive outside bars. You're starting to confirm that you're getting trading range price action. Bear bar, and then a doji, weak bar. You can call it a double bottom or a wedge or a truncated wedge, doesn't really matter. We had a wedge bottom, we broke above the trend line here. We're retesting, but 1, 2, 3, 4, 5 consecutive bear bars, weak stop entry buy. Some bulls will buy above, maybe stop below, but it's not a great buy. And just like that, so we went above it and we sold off. Trying to break below the moving average, I'm not all that sure. You can argue that this is becoming more of kind of a breakout mode situation. So when I said over here that this may not be a proper breakout mode, you typically need 10 bars. This qualifies certainly as a failed breakout below the lows, and then we need a failed breakout of the highs. And it's possible, you always have to wonder if one of these bars is an outlier. So maybe this bar was the start of the trading range. And over here, we broke above these highs, but not up here. So this, I don't know how to, from here over, if this is the start of the trading range, I know this was, but think of this as an outlier. If this was the start of a trading range, we broke below the range, we broke above the range, we're going sideways and forming a double bottom. We know that later on in the day we get a bear breakout, but that's just kind of more of a just a little tidbit. Anyways, fairly tight channel, stop entry buy. This is a reasonable stop entry buy. It's not a great one, but if you're betting on the low of the day, you're betting at the moving average, it's an okay buy. Stop below, you probably will get stopped out, but it's an okay buy. And we get a bull bar closing on its high, stop below, and we get a disappointing bar. So 2 legs up. So we have a high, lower low, lower high, and a higher low, and now another lower high. The bears need the bear breakout, the bulls want the bull breakout. So what are we going to get? Well, some bulls may get out here and say, okay, a lot of traders scalped, I'm just going to get out and wait. And then we get another double bottom, so now we have more of a triangle. 3 pushes, 1, 2, 3. Again, same thing. Some bulls will buy above, stop below. Other bears will wait for it to fail. And you can see we're not, the bulls can't get far above. And then we get a bear bar. So we get a bear bar closing on its low, trapping all these bars. Is it enough to say it's always in short? Probably not, but it won't take much to become always in short. And then we get a follow through bar. So now we've closed below this many bars, and you're starting to get selling pressure. So 1, 2, 3, 4, 5 consecutive bear bars, 2 bull bars, 2 bull bars, 3 bear bars, 1 bull bar, 4 bear bars. It's starting to show selling pressure. And then we get another bear bar, 1, 2, 3, 4, 5 bear bars. And then we get the breakout. One of the things that's difficult when you see all this is it looks like it's a wedge. And it's so easy to say it's a wedge. 3 pushes down, I can't buy it, I've got to buy it, I can't sell. Well, this can be an endless pullback, and we can go a long ways. And then you get the big bear bar. So now you've got confirmation, you know it's going lower. Maybe you sell, put your stop above, and you say, I'm going to get a measure move down. Well, in a trading range, when it becomes, this is kind of a trending trading range. Tight trading range, bear breakout, you always have to wonder, am I going to get another tight trading range? And a little bit of follow through, more, and then we reversed up. And I'm alluding to all of this. So when you're selling in what could be, this is why a lot of traders like to scale in. They're selling closes and they're disappointed, and traders are scalping. And rather than just sell and say, okay, stop's up here, move my stop here, and doesn't get hit, and then I sell, ride it all the way down here. A lot of traders will say, sell the close, maybe I sell the close again, but maybe I start scalping. Okay, I'm going to sell, I'm going to, take my profits back at these lows. I may sell this close, and scalp out. And bulls, what are they doing? Well, they're going to buy. I'm buying these lows, buying down here, scalping out. And then again, same thing. Traders are selling up here, scalping out. So as strong as this is, you've got to be this down here. This is a strong breakout, strong enough you'll get a second leg down. But you may have to go sideways for a while. Plus, we're at obvious resistance or support, these lows. So down here, traders are selling the close, disappointed by this bar. A lot tried to get out at the lows. So the close of this bar was 87.25. The lows was 87.25. Second entry buy. Traders that didn't get out at this close and this low may get out above this bar. If I was trading always in, I would get out above this bar and look to sell higher. Aggressive bulls may buy, but if you're trading always in, I wouldn't worry too much about that. So big bull bar, surprise, probably going to have at least a little bit more up. And, there's your second leg up. So not doing enough, but we're starting to be disappointing. We're probably going to be in a trading range. Not enough to make it a major trend reversal yet. We have 2 legs up. Maybe if we can get a double bottom and a measured move up, that's possible. But after 4 consecutive bear bars, 2 big bodies, it's probably enough that this is just going to be a trading range. And it still slightly favors the bears. So we got a new low, but bulls wanting to buy. This looks like a leg in a trading range. This looks like a leg in a trading range. We're in a trading range. Big bull bar, but bad follow through, but not great. Big bear bar. So big up, big down, big up, big down. It's very easy to get trapped into buying and selling back and forth on stops and losing money. Big bear bar, follow through bar. At some point we'll get the bear breakout and you have to wonder, this might be it. And then you get, a weak doji. It's a wedge bottom, 1, 2, 3, weak doji, outside down, follow through, and going lower into the day. So overall, it's 3 pushes down. You do something like that, it doesn't really matter. But that's what a lot of, it looks very simple. 15-minute chart, gap up, big bear bar, 2-legged pullback, follow through down. So let me do always in. So always in traders. First always in trade, it's aggressive. Maybe you sell below, but if you do, you probably got to go long here. And what do? I personally would get out somewhere up here. I don't like to hold unless I think it's strong. And then maybe you buy here, but if you do, what do you do with this? Maybe you get out below the bar. Maybe you buy here, and then you get out maybe below that bar, then you get the bear bar, follow through, so maybe start selling closes, stop up here, big breakout, and do you get out here? You can. I would, and if I didn't, maybe I get out 50% pullback of the bar, because I know the bulls are going to try and buy 50% pullback of the bull bar. And aggressive bulls, it's okay to buy, always in, definitely get out above the bar. You can buy, stop below. And I think a lot of traders would just scalp at the moving average, knowing that you're going to get a pullback and probably go sideways. So just take your profits if it's going up. Other traders may hold and then start to be disappointed and take profits. If you're a limit order trader, you probably buy, scalp out, and then, I think it's okay to start to sell up here and scalp out. Or, again, traders will buy a pullback, strong enough rally, you'll get a second leg up. So buy, scale and lower, scalp out up here, and traders will sell up here. Not really that great for always in, because by the time it's clearly going up, it pulls back, and when it looks like it's starting to go down, it reverses. But double top, wedge top, 1, 2, 3. So it's an okay sell below. But again, a lot of bull bars, could be a tight trading range. So better to be selling high, maybe above the moving average, and taking profits down here. You can see we get a big bear bar, bad follow through, big bear bar, weak follow through. So looks like a leg in a trading range. It doesn't look like this. This is still the most dominant feature of the day. So again, it's okay to be short here, stop up here. But if you are, you got to be prepared to hold through something like this or be quick to get out down here. I would personally look to get out. I don't want to hold at the bottom of a trading range. And, this is pretty hard to sell. I mean, maybe you sell here, but I don't think I would not be inclined to do that. But it is always in short. So in theory, you've got to find a way to get short, but where do you get short? Do you sell below this bar? You could, but what if you sold below this bar? What if you sold here? Do you stay long here? I mean, it's not super simple. This is a triangle, 3 pushes up. So you probably can sell here, but either way, I probably wouldn't. And you just kind of let it be on the end of the day. And yeah, so overall, it's a trending trading range, bear breakout, trading range, more down. So hope this video helps.